Hello guys, it's Thursday and just yesterday we did have the CPI and we did have the GDP as well. The GDP being for Europe and the CPI for USA. Now, stay with me until the end that I will disclose what just happened and how I was able to predict these through the Telegram. I've mentioned that on the Telegram that the CPI would come lower. Okay, so if you're not there, you missing. This is free. We don't charge anything. I don't know why it's not going to there. All right, so make sure for you to be on the Telegram. Easy, just go to the description of the video and access the Telegram link. Now, tonight we're gonna have the webinar as well, 7 to 8 p.m. in Australian time. Okay, so make sure to register. As you go into the description of the video, you will see the link for the registration of the webinar. Easy, no cost involved, free, all right? We're just gonna ask you for the email because we need to send you the link for the Zoom meeting afterwards. So this is all I have to say and let's go for the video. Now, we did have the GDP year over year and as well quarter over quarter. I'm looking at the numbers so I don't miss anything for the Eurozone. Okay, so for the whole Europe pretty much, all the countries that use euro on Europe. The year over year measure from quarter one last year to quarter one this year, okay, came in as the consensus was expected. All right, so 0.4 was the consensus and the actual came in at 0.4 as well. The previous was 0.1. So in a sense, the economy is growing, okay, because the previous was 0.1 and now it's 0.4, but still as expected. Therefore, the market was expecting this move on the GDP. So when we have, let's say 7 p.m. yesterday, that was the release of the data, we didn't had the big influence into the market, right? Because we saw it. Now, moving ahead, the GDP quarter over quarter came in as expected as well. The previous was negative 0.1% and the consensus was 0.3% and the actual was 0.3% as well. So no changes between the consensus and the actual, and continue to grow between the previous and the actual. Okay, there's a big growth actually from negative 0.1%. When I mean 0.1 means negative 0.1. Okay, just so you guys make sure it's not negative 1%, it's negative 0.1% to now positive 0.3%. So there was a big change from the previous to the actual quarter over quarter. Okay, this is from the euro area. Now, it didn't have any big impact, all right, because again it was expected for the market. Now, if we go ahead and we look at 10:30 p.m. on Australian time yesterday, last night, we did have the retail sales, the CPI, the core CPI, CPI month over month, the CPI year over year, as well as the core retail sales, and the New York Empire State Manufacturing Index. All of those data had a huge impact on the market. We've seen euro dollar trading right now around 108.9, so very close to 109. Okay, now let's break those numbers down. But before, give us a thumbs up on this video, share this content with your friend, and subscribe to the channel. This is the most important thing. Some of you guys I've seen on the comments of the video that you've commented, I've subscribed to the channel, but unfortunately the YouTube is not sending the content to me. So I suggest you to come here every day if possible and have a look on the new videos we have, because we post new content every single day, all right? So from Monday to Friday, not Saturday and Sunday, because we need a little bit of a rest, but most of the days we are on, okay? So subscribe to the channel, and if you're not receiving the notifications that we've uploaded a new video from YouTube, then you can just come to ACY YouTube channel and have a look on that. Now, have you given the thumbs up? I'm still waiting for that. All right, just joking. Now let's go for the CPI. I'm gonna get my phone here so I don't miss the numbers. Let's just start with the retail sales. Core retail sales month over month from the month of April was a little bit tricky here. Okay, a little bit tricky. Now, the measure was from the month of April, but the previous one was revised down. So the March core retail sales was revised down to 0.9%. Okay, so that's not good. Now, the consensus for the April core retail sales was 0.2%, and the actual came in at 0.2%. Then the retail sales, not the core, the retail sales month over month, the month of April, last month, did have the previous revised down as well. So the March one has been revised down to 0.6%. The consensus was 0.4%, and the actual came in at nothing. Zero. A big zero. What a miss. What a miss. All right, because the market, the consensus was expecting 0.4%, and it came in at 0%. So 0.4 of a miss in that number. Now, moving to the CPI, before actually, let me explain you why this is not good for the US dollar. I've explained this a little bit of a few times already, but I don't mind. I can explain this again. If you're new into the channel, you must be asking, why did the retail sales came low, and why did this influence the market, the US dollar, sorry? Well, the whole market pretty much, all right? Because the market participants were so anxious about this data release that we just had yesterday that everyone was looking to the market. Everyone, big institutions, small players, big players, huge players, foreign direct investors, countries, governments, central banks, everyone was looking to this. So this is very, very important. But when we have a lower retail sales, that means that the population is not spending money. I don't want to get too deep into that, but I just want to say that if the population is not spending money, therefore there is no generation of inflation. If there's no generation of inflation, there is a chance, all right, small chance, but there is a chance. We can't just cover our eyes and say, well, the chance is not there. Yes, it's still there for the Fed to do 2 cuts this year, because the Fed is holding the rates for longer just because the inflation is high. And the rates are that level, 525 to 550, because they want the population to stop spending. Therefore, this will make the inflation to come down. I like to say that the economy in any piece, any part of the world is like a Swiss clock. Everything needs to move as expected. Otherwise, it's going to be a disaster. It's going to be a mess into the economy. All right. Now, as I was saying, the retail sales came lower. So therefore, the market was like, okay, so we don't need to buy US dollars anymore. We can start to sell these US dollars because we know that there is a probability of the Fed cutting twice this year. And not only once. Well, first here, in December 2023, October, November, December, the last quarter of 2023, everyone was expecting 7 rate cuts from the Fed. Indeed, now everyone's expecting only 1 and maybe 2. So market changes, market dynamic changes very, very quick, and you need to be adapted to it. A good trader, they don't only chase data. He takes the data, put into a spreadsheet, note it down, analyze the data into a overall context and see, okay, the data is coming down. Well, the data is not coming down. The market is waiting for this to come down. So therefore, they are pricing already. Sorry, I missed the word. They are trying to already to price in the data that is not yet released. So there's lots and lots of things that one day I will make a video only about that. So already extending too much, let's go for the core CPI. Core CPI month over month month of April came in as expected, 0.3% as the consensus was expecting, and the previous was 0.4%. So a little bit of a decline actually, because if we look at it 0.4 now to 0.3.1% of lower number, that's good. That's good. Inflation is sort of calming down, but still very sticky. Okay, very, very sticky. Now, the CPI month over month, not the core, the CPI month over month, month of April, came in lower than expected at 0.3%. Consensus was 0.4%, and the previous was 0.4%. All right, so 0.1 lower than what the consensus was expecting and from the previous as well. Then we had CPI year over year, month of April. The month of April was expected to be at 3.4%. Indeed, it came in as 3.4%, and the previous was 3.5%. So we did have 0.1% lower than the last year. Okay, so the CPI year over year here was measured from April last year to April this last month. Okay, so April 2023 all the way to April 2024. That's 12 months. They calculate. They do a simple arithmetic maths, and then we have the calculate number. And then we had the New York Empire State Manufacturing Index came in at much lower than expected. Consensus was negative 9.90. The actual came in at negative 15.60, 15.60. Okay, so this actually made the US dollar very weak. I was mentioning about the level of 104 into some blogs, so you guys need to always be attending those webinars, reading those blog posts that we post into the Telegram group, into the ACY website. So follow us to get those good opportunities, okay? Now, today, it's going to be another set of data, all right? We're not going to have too much, but we will still have some things. So let's go. At 10:30 p.m., we're going to have initial jobless claims. Remember, this is a weekly data, right? So it's not going to have a huge influence into the market. But we're going to have the ECB financial stability review, as well as the Europe economic forecast for Europe, all right? And then we're going to have import price and export price for USA. And after that, we're going to have industrial production year over year and month over month. And tomorrow, Friday, right after midnight 30, we will have the member Holker giving a speech. So always very important to listen to those speeches, all right? I will probably be on to that. And then continuing tomorrow at 7 p.m. in Australian time, we're gonna have the core and the CPI year over year and month over month for Europe, and this is going to be crucial to see how the market will react into the Eurozone, because Europe is very strong. Euro dollar is very strong at the moment, but we need to know how this will react and how this will affect the continuation of euro dollar, euro yen, euro pound, euro Aussie, euro CHF, continuation of those currencies. Okay, so stay tuned. Subscribe to the channel. Again, give us a thumbs up on the video. Share this content with your friend. I'm sure some of your friends are lost and don't have a clue on what's happening on the market. So now you know what is happening on the market. And remember, we will be here tomorrow, okay? And I will post the video for the ECB projection. Sorry, not the ECB, the core CPI and the CPI projection that I've been doing this for the whole week already. I'm ready to release this tonight with my webinar members that will participate. So if you want to know before everyone, then come tonight, or otherwise you can wait until tomorrow and maybe miss a big opportunity that is right in front of you. So be ready for tonight. All right, guys, hope everyone is having a good day, good night, a good afternoon, and I see you in the next video. Bye-bye.